All right, everybody. So today I'm going to be covering a change of character, uh, and what are the key things that identify a change of character or a change of behavior versus just a normal big wave. All right. So here we see a change of character, and I'm going to start going into what makes it work and all of that. Basically, if you get this right, you'll be able to trade turning points. If you trade If you trade turning points, you're going to do really good. All right. If you don't know this, it's going to be, I don't know, maybe another setup, because this setup, it requires this type of stuff to learn. All right. So you need to know what makes a damn setup work. Any setup you trade, you need to know what are its key factors that make it work or not. Now, how you get that info is by observation of the key factors that make it work, and I'll show you, what makes this thing work and puts all the probability on your side and all that. Because I have a lot of experience with this. So anyway, so when do the change of behaviors and change of character work? It's really important, because if you have a downtrend and you're going to take that reversal, you're looking for a change of behavior. All right, so you have to be able to detect that change of behavior, and then you have to see, is this really a change of behavior, or is this just a bullshit little pullback that gives you nothing, right? So you have to know that. So that's how I'm going to teach you. First of all, the key factors of a change of behavior is the higher time frame trend and higher time frame level. I'm going to elaborate on this. If the market on a higher time frame, and let's just say this is a 5-minute chart, right? So, and the higher time frame is, let's say, a multi-hour chart, at least 1 hour, right? So on the 1 hour chart, if it's an aggressive markdown, this trade's not going to work. If it's an aggressive markdown, so let's say it does something like this, and you're looking for that change of behavior right here. If it's really aggressive markdown, the likelihood of a change of behavior right there working is it's not that great. It depends on the aggressive markdown, which depends not only on this but also on what was I saying? Yeah. So what it depends on aggressive markdown. Look at the slope of the way it's falling. It's not just higher, high, higher, low, all that shit. It's also how it's falling. It matters. The slope. All right. So if this thing on a lower time frame, on a 5-minute, will look like this. This piece will look like and you're trying to judge whether this is your change of behavior, right? Right, so you try and judge whether this little thing right here is a change of behavior, let's say at a support level. Let's say on a spring, for example, like a spring in a downtrend, right? So here, bing, and it does this. How do you know this is going to work and going to go higher or not for a short-term pop, right? So one of the things is the trend. This is a downtrend. So it's a spring in a downtrend, which has a change of behavior. So we have a change of behavior on a spring in a downtrend. Already it's in a downtrend. So this is screwed up. meaning trend is not favorable. Now, I'm not saying that you can't do counter trend moves, but it's, the trend factor is not on your side. You're probably better off taking the upthrust up here instead of the spring. Second is the higher time frame level. This is at the level, so level is favorable. Why? Because it's at support. It's bringing support and it's coming back into support. It's not some random place on the chart. If it's a random place on a chart, you have no point of reference. You need a point of reference. You need a prior low or a prior high as a point of reference. That's how professionals trade. They trade off levels. They trade off of, okay, this level, that level, whatever. So you have a level, it's bringing it, change of behavior happens. So the level is favorable because you have a level, or you have a point of reference. If you don't have a point of reference, it's just random. It's just a selling wave off random. And most of the time, a lot of change of behaviors, you don't know why they're coming from what. So they can come from different levels. They can also come from overbought, oversold positions. And there was one other thing which I can't remember now. Right? Someone, when I talk about overbought, oversold, basically, it's basically trend lines at the top and bottom of a channel. It's stuff like that. But let's just stick with level to keep it simple. There are actually 3 places they occur. I forgot the third one. Anyway, who cares? So trend is not favorable, but level is favorable. Okay, level meaning you have a level. It's not some random place. Oh yeah, No, we don't want to deal with that. All right. Okay, so this is the higher time frame thing. Okay, higher time frame. Trend is it favorable or not? Is the level favorable or not? If you don't have these two things, you're already at a disadvantage, especially if you're counter trending, because the move is gonna go in your favor if you get it, but it's gonna be a small shit move. So if you have to know that. All right, now we're going to go into the key factors that make the change of behavior work. Pay close attention. This is not on the internet because they don't even have a fucking clue. All right, let me just be real. All right, so in the change of behavior, you must have big range bars. Now, they're called ease of movement or some shit, but big range bars. The bar range has to be big. Why? It is aggressive buying. It's saying that demand is taking overhead supply. It's just buy, buy, buy. You need that aggressive buying. All right. If you have an indicator, right, I'll tell you what to look for. If you want to do this, where I say big range bar, minimum greater it must have multiple of these bars, where the bar trading range, which means the high to low, which is the range of the bars in the change of behavior, the bars that make it up, the green bars, their range should be greater than at least 1.2 times the ATR. You can use ATR 14, you can use ATR 20, that I don't care, but any average, even ATR 20 is fine, or even ATR 50, anyway. But yeah, just use normal ATR, but it has to be bigger than the average. Big range bars within there, and it has to have multiple of them. Then you know that the buying is aggressive. It cannot be a change of behavior without those big bars. Is totally suspect. Not only that, it has to have multiple of those bars to show. Otherwise, how the hell is it a big wave? It means that it's some bullshit. And if there's only one, you have to really think, does it have follow through or not? Because it could just be short covering. And as you know, it's a pop and drop. Short covering has that, maybe one big bar and then it just dies. So you need big range bars. Okay? All right. Second, I should have put this. Ugh. It has to have, you guys already know it has to have volume, but that volume should be significantly higher than 2 times the average wave volume. So the average wave volume, you can take a look at the prior wave volumes, and significantly it should be more than 2 times. And I'll show you examples. It should be heavy volume, cannot be a little extra. It should be clearly obvious, sticking out like a sore thumb, big wave volume. Okay. Also, on the pullback, you must have low volume pullback. And I'll show you examples of this, where you can use average wave volume and compare the volume on the pullbacks to an average to see if it's less than the average. If it's significantly less, you know that you have a lack of selling and the market will go in the direction of the change of behavior. So that low volume pullback, believe me, your change of behavior does not mean shit if there is no low volume pullback after it. It is totally suspect. So A, you need big range bars, heavy volume, big price movement. And then on the pullback, must have low volume pullback, small waves, low volume pullback, it's going to work. Third is this trend break. So I'll show you here. It's just a higher high break. It makes, you see how this thing made a higher high? You need this. This is a very important indication. Yes, there's a time when you know, it'll work even if it's not, if you don't get that higher high break, right? There are times when it does, when it works, irregardless. But this is a key factor because the higher high in a way is going to help you forecast the higher low. So think of it like that. And this final factor is high volume accumulation distribution, meaning here in this area there should be accumulation. Okay, I'm going to show you guys this, all right, because that high volume, it looks like trap volume, but it's really accumulation volume. It will hold a tendency of holding on the pullback and then creating trend. All right, so these are some of the key factors. And the other one, you know, that you all know, I hope, is the volume of the bottom. Right, the volume of the bottom, or the thrust of the bottom, the big bars and big volume bars, volume off the bottom and thrust of the bottom, this is also a key factor. Okay, so let's just take a look at some examples. Well, yeah, take a look at this, you know, make a screenshot, because I'm teaching what is not taught. And also not understood. So this is what matters. And if you don't get this right, you're gonna buy, and you basically buy in a downtrend, it's just gonna go down. If you know how to catch it, you're gonna catch the turning point. You're gonna catch it, and it's gonna go up. All right. So today we had a move on the ES. I will show you this. I'll show you what made it work. What made this, and some other trade maybe I'll show us also. All right. Now this is your selling wave here. All right. So the first thing you notice is it is and I'm just showing the intraday trades, guys. So you've noticed that I have a level. So it goes above and back below it. Okay? Above and back below it. Important. All right. So that's the what I was showing before. You have, you know, having a level, point of reference. Even this one, my God, this one's setting up right now. I might just trade this. You see? I'll look at it in a few minutes. What the anyway. See that? Up thrusting that area and rejecting. Let's see how this is looking. I don't know why it looks like this. Anyway, I'll see how this thing rejects. So might set up a trade. Anyway, so first thing is you have a level. You need a level. All right, remember in Weiss's book, what is the first thing he told you to do? Draw the lines. Why? Because that's where you look for trades. And he made that fish example that they go at the creek of the lake or something like that, right? That creek or that edge is the line, all right? So first thing is we see that. All right. Second thing, so the first thing in the high time frame is the level. Second, level and of course trend. So trend and level. If I didn't show you all that and I just showed you this, what would you say? Is this uptrending or downtrending? If I just showed you this, it's clearly downtrending. It's clearly making lower high, lower low, lower high, lower low, lower high, lower low, lower high, makes a low, and then up thrusts. So a series of lower lows, lower highs, right? It's in the bottom part of the Keltner channel. This, by the way, I'll talk about later or in a separate video, is the most underrated and probably the best technical indicator, one of the best technical indicators there are, because of certain, it has risk management built into it, it has entries built into it, it has everything built into it. This is the most underrated technical indicator there is, this one right here, Keltner channel. And it's so easy because it's based off of everything, of stuff people already know, specifically the moving average. It's already based off top of that, so anybody can learn it. It doesn't require, you know, some nerd, right? So here you have a level and you have trend. All right, so we got those two things from the higher time frame. Now we go to the lower time frame, and the first thing I told you guys is there needs to be wide-ranging bars. There needs to be big bars with big range, ease of movement, whatever you want to call it. Take a look at this wave. Take a look at this wave. This bar is the biggest bar in 100 bars with the low end close. Next one is the biggest bar, another 100 bars in the low end close. Doesn't this fit the bill? Isn't it aggressive? Aren't the wide bars wide ranging? Yes, they are. What else you want to know? You know, bank, bank, bank. Right there. Second, it needs to make a lower low. The example I gave you was that it should make a higher high. The change of behavior should make a higher high. Since this is on the downside, it needs to make a lower low. Does it make a lower low? Yes, it makes the lower low. It cracks this low, and it makes the lower low. So you have big range bars, widespread ease of movement, making and breaking the low, making a lower low. All right? What else? I think I also said you need to have accumulation or distribution in the background. Now for this piece, I'll show you two ways to do it. The first is, let's say you don't have anything but a bar chart. If you have nothing but a bar chart, look left and see if you have overlapping bars. If you have overlapping bars overlapping each other, that's typically a sign of volume being accumulated or distributed across that level, because each bar has volume. Each bar has volume, 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 volume. If they're all within a certain range, bar 1, 2, 3, 4, 5, 6 overlapping in a certain range, the volume has built up there because it's volume plus volume plus volume of each bar plus bar plus bar. In that range, you have a hell lot of volume because there's a lot of bars consecutively overlapping in that particular range. And that typically is a sign of distribution. So that's one way to do it. The other way is to have some type of tapering chart or some type of chart. And what you'll see in that chart is going to be like a heavy, volume. So this time frame is a little high, but basically you're going to see high volume. So I have it right here on the downside, basically showing the reversal and retest and all that. But the point that I'm trying to make here is that if I brought out a footprint chart or anything with the volume at price, you would see it here. Maybe I'll do it with the profile. All right, watch this. See this? Can you tell me why all the volume is up high? Not down here, but up high? Can you tell me why? It's distribution. All this distribution. Okay? So, you need that fucking distribution. Or a bullish change of behavior, you need that accumulation. Why? You put your stop against it. It's very hard to take out all that volume. All right? So now you have the elements for a trade. I think I covered everything. You have the higher time frame factors, which are what? Level and trend. Trend and level. TL. Lower time frame factors. They are the range of the bars needing to be big. A trend break with at least a lower low for a bearish change of behavior or a higher high for a bullish change of behavior. And 3, accumulation or distribution behind the change of behavior. In this case, I clearly show you the distribution right behind the change of behavior. So then what happens? It tries to, shake, rattle, and mess with you. But don't worry about it because you have all that juice. And what happens? Goes down. So tap, retap. And this is just a little bit of testing and retesting, upthrusting again, because there was some news. And so they bought a little bit over here to cover, because of that news. And even though it was there, after it went to the level and retested, it went straight down. And that was the move. Okay? So, and then over here, there was some buying and then it went up. So this is what I wanted to explain to you on what to look for. I'll go over it one more time. What the hell did I just do? All right. Okay. You can see the higher time frame factors of trend, and level on my side. Lower time frame factors, big range bars right here, 100, 100. It's a done deal. That shit, this puts all the probabilities on my side. And then I have a trend break and I have accumulation as I showed you on the profile right there. I mean the distribution, excuse me, distribution I showed you. And then after I just got a little, little tap, retap, and then finally went down. Okay, basically it took out the low of this rally. That was the trade in the morning. So, all right. So that's what I wanted to cover with you all. That's all, folks. So just look at what I'm saying here and just try to, incorporate it or learn about it, and you'll see a lot of things, and you'll see what makes the change of behavior more likely to work than not. All right, take care. Bye.